This session. Yeah. Okay, guys. Good evening to all of you. Let's start discussing about today's session. So yesterday we were discussing about accounting terms. We discussed around 21 or 22 accounting terms. Any doubt in yesterday's class? No doubt. All of you, no doubt. Okay. Then I will ask you a few questions. Okay. Can someone tell me what do you mean by assets?
Sir, assets are something that we own, which we can regenerate money, which we can generate money.
Sir, assets are resources which gives economic benefit to the enterprise.
Okay. What are the two classification of assets?
Current
Current
asset and
assets and current assets.
Current assets
Non-current
and
assets, current asset, non-current assets.
current assets and non-current assets. What is non-current asset in one line? What is non-current assets in one line?
So something that is owned by the entity for more than a period of 12 months.
Yeah, which is intended to be used for a period of more than 12 months or 1 year. Clear? Fantastic. Current asset is something which can be converted into cash within less than 12 months. Clear? In non-current assets, there are again two categories.
tangible assets and intangible assets.
Intangible assets. Tangible assets and intangible assets. Tangible asset is something which we can touch. Intangible asset is something which we cannot touch. Clear? So when someone asks you what is an asset, you have to start from the beginning. That assets are of two types, non-current and current. And asset means something which has a future economic benefit. Something which gives a future economic benefit, that is treated as an asset. Non-current asset means it is intended to be used for a period of more than 1 year. Current asset means it can be converted into cash within a period of 1 year. Clear? Examples of non-current asset, any example? Tangible non-current asset, any example?
So machinery,
Machinery, fantastic. What else?
Land, buildings.
Land, building, furniture.
Mm.
Intangible, any example of intangible?
Goodwill,
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 patent, trademarks.
patents,
Trademarks, fantastic. Software, copyright, all these are intangible assets. Good. Okay. And what else we discussed? We discussed about liability. How do you define a liability? Or not the definition, maybe what do you understand by a liability?
so anything that is owed by the business or enterprise to anybody, to any external person is called as a liability.
Fantastic. Okay. So anything which is owed by the business to anyone is a liability, not just external, because there is a liability of this. Liabilities are of two types. One is someone has to go on
current
mute.
liabilities, non-current liabilities.
That is fine, current and non-current, but external liability and internal liability. Clear? Current and non-current is also one classification of liability. It's similar to asset, but we didn't discuss it last class, but it is there. There exists, like similar to non-current asset and current asset, there also exists non-current liability and current liability. But for the purpose of discussion, when we talk about liability, it is divided into internal and external. Internal liability means capital contributed by the owner. External liabilities means something which we are owing, the business is owing to any outsider, like a bank, a loan taken from a bank, or is from a supplier. If we have purchased the goods on credit, we have to pay the supplier back, right? That supplier is called as creditor. Now, since Sanjana touched that topic on current and non-current, I will clarify that also. Very good point. Something which we did not discuss yesterday, and but still relevant actually. Current liability is a liability which we need to pay within a period of 12 months. Non-current liability is a liability which we have to pay. The amount to be paid is after a period of 1 year. If I take a loan for a building, generally we take a loan for 15 years or 20 years, right? If I want to purchase a flat, the liability will be, the loan will be for a period of 15 to 20 years. Any amount which has to be paid after 1 year for that loan will fall under non-current. Within 12 months, whatever has to be paid will fall under current. Clear? If I take an example of a supplier who has given yesterday, who gave 5 laptops on credit. Now I will pay the supplier after 1 year or within 1 year. I need to pay the supplier who has provided me laptops on credit within 1 year or after 1 year?
Within 1 year, sir.
Within 1 year. Because
Within 1 year. Within 1 year.
generally suppliers will not wait for more than 1 year. So they are called as current liabilities. Creditors, suppliers are also called creditors. So creditors is current liability. Clear, guys? So we discussed about assets, liabilities. Now income and expenses. Anything, any income which is generated from day-to-day operations of the business. Any income which is generated from day-to-day operations of the business, that is called as what? What do we call that? We can call it as sales, and we can also call it as a revenue receipt. There are two kinds of receipt, right? Revenue receipt and capital receipt. Revenue receipt is something which is generated from day-to-day operations. Like we were discussing yesterday, I have a showroom to sell laptops. The sale of laptop will be a revenue receipt or capital receipt?
Revenue receipt.
Revenue receipt. And in the laptop showroom, there is a sofa. If I sell that sofa will be
Capital receipt.
Capital receipt. So this got registered in your mind. Similarly, in the same laptop showroom, if I purchase a laptop on credit, if I purchase a laptop, not on credit, if I purchase a laptop, that purchase of laptop will be revenue expenditure or capital expenditure?
Revenue expenses.
Revenue expenditure. If in the same showroom I purchase a sofa, that sofa will be capital expenditure or revenue expenditure?
Capital expenditure.
Capital expenditure. So you are clear about revenue expenditure, capital expenditure, revenue receipt and capital receipt. We are clear about asset. We are clear about liability. We are clear about income. We are clear about expenses. Expenses are of two types. Yesterday we discussed expenses are of two types: direct expenses and indirect expenses. Clear? What is direct expenses? Any expense which is incurred directly to generate revenue. Like if I want to sell a laptop, I will have to purchase a laptop, right? That purchase of laptop will be a direct expenditure. Clear? Okay. But the accountant that is sitting in the showroom, I have to pay salary to the accountant, right? Is the accountant helping in generating a sale? Can I do the sale without the accountant also? Yes, we can do the sale without the accountant also. Accountant is not required to make the sale or to do anything related to sale. So the salary that I pay to that accountant is called as indirect expenses. Clear? Clear, guys?
Yes, sir.
So this is what we had discussed yesterday, majorly. Now we will move forward to today's discussion. I will start sharing my screen now. Okay, can you see my screen, guys?
Yes, sir.
Yes, sir.
Yes, sir.
So we discussed till 21, and how many of you opened TS Grewal and saw whatever we discussed? I will stop presenting again. How many of you opened TS Grewal and saw whatever we discussed? Put a yes. If you have seen, put a yes in the chat box, guys. How many of you seen TS Grewal yesterday? Only 1, 2, 3, 4, 5, 6, 7, 8. Okay, good. Were you able to relate with all the discussions that we had? Nothing would have been new in that, right? Till term number 22. Nothing was new, right? Clear? So keep following with me. Keep traveling with me in the class. It will be very easy for you to. And I'm sure that I spoke for 90 minutes, but you would not have taken more than 20 minutes or 30 minutes to go through all the terms, right? Yeah, because we had enough discussion for 90 minutes for you to go through the entire thing in 20 to 30 minutes. That much is enough, guys. Clear? But in few other chapters, when we start discussing practical, maybe if I spend 1 hour, you may have to spend 1.5 hours. If I spend in few chapters, it will be if I spend 1 hour, you have to spend 45 minutes. But whatever it is, if you just keep traveling with me, it will be ensured that you guys, all of you guys are on track. Clear? So can you all travel with me? Everyone?
Yes, sir.
Okay.
Sir.
I heard only 2 or 3 yes. Can everyone ensure
Yes,
that they are
sir.
traveling with me?
Yes, sir.
Fantastic.
Yes,
guys.
sir.
Yes,
Yes,
sir.
sir.
Fantastic. Okay. So with this, let us start today's discussion, guys. We'll move forward now. I will share my screen again. Okay. Today we will complete this chapter. Then we will move to the MCQs. Okay. Today we'll complete this chapter, move to the MCQs, and then we will see if we can start the next chapter if possible, if time permits. Otherwise, we'll complete this chapter and tomorrow we'll take up the new chapter. Clear? I will not be rushing at any point of time. Even if the school is rushing and completing 7, 8 chapters, it will not matter to me. We will understand each and every concept, everything which is written in TS Grewal. I have to ensure that by end of January or February, or whenever we are completing a chapter, you guys are entirely thorough with that. Clear? That is our objective. You have to be on top of every single concept which is given in TS Grewal. And once you achieve that objective, you will be on top of CBSE 11 by end of my entire session, actually. Clear, guys? That part I will ensure. Your part is only to travel with me and follow the TS Grewal immediately on the next day after our class. That is your thing. Clear, guys? Remaining things I will take care. Okay. Yeah. So we discussed about till here. Next is stock, trade receivables, and trade payables. What is stock, guys? Yesterday we purchased 100 laptops for sale, right? We could sell only 80 laptops. 20 laptops we were not able to sell as on 31st March. Our financial year ends on 31st March. Everyone is aware, right? It starts on April 1st and ends on 31st March. On 31st March 2026, the 3-4 months back, 31st March 2026 came. On 31st March 2026, 20 laptops were unsold. 20 laptops were unsold. That unsold laptops are called as stock. That unsold laptops are called as stock. What is stock? Stock are of three types. It can be of finished goods.
Raw material and the work in progress.
Yeah, it can be of raw material. It can be of work in progress. It can be of finished goods. Three things: raw material, work in progress, and finished goods. Let me take a different example now. Now we changed our business. We are now a shirt manufacturer. We are now a shirt manufacturer. For a shirt manufacturer, what is the raw material? Cotton,
Cloth,
cotton, button,
wool or
wool, whatever it is. So there is a cloth, there is a button which is required, there is a thread which is required. All these are raw material. Okay. Now I started manufacturing a shirt. I manufactured 100 shirts. I have manufactured 50 shirts are in progress. 50 shirts are in progress. And I purchased lot of buttons. I purchased 10,000 buttons. I have purchased 100 kgs of cotton or thread. I have purchased lot of raw material. I have purchased. Clear? How many shirts got completed? 100. I purchased 10,000 buttons. I purchased maybe some cotton also. So, and 100 shirts got completed. Now, in this, how much is finished goods? Finished goods is 100 shirts got finished.
100 shirts.
Work in progress, around 20 shirts are in progress. 20 shirts are in progress. Raw material, I have 10,000 buttons I have purchased as raw material. Okay. So I have three kinds of stock now. Something which is a raw material, which I have not even started production. It is there in my godown. Okay. Something which is there in my godown, very raw. That is called as stock of raw material. Work in progress is I started manufacturing my shirt. Half the shirt is stitched. I have to still put the buttons in the shirt. So half the shirt is stitched, but I cannot sell the shirt, right? That is called work in progress. Finished goods is 20 shirts got completed. It is ready for sale. That 20 shirts is finished goods. Any doubt? So raw material can be of three types. One is raw material,
work in progress,
work in progress, and finished
Raw
goods.
material, work in progress, finished goods.
Finished goods. Are you clear, guys? Do you
Yes,
have to
sir.
remember this now?
Yes, sir.
Yes. In our class, we don't remember anything. We only understand. Clear? Okay. Remember means you can recall that concept, but don't try to by heart. Fine. So raw materials are of three types: raw material, work in progress, and finished goods. Any doubt? Okay. See, one thing is not relevant to you at this point, but still I will tell, because there is one question in TS Reval. Raw materials, sorry. And it is also called as inventory. Stock or inventory both means the same. We can either call it as stock or we can either call it as inventory. Both means the same. Clear? Okay. Now the next thing. What? Okay. This raw material or finished goods, this stock, we need to value See, to record a stock, we need to have the valuation, right? We need to do a valuation. The valuation of stock is cost or net realizable value, whichever is lower. Cost or net realizable value, whichever is lower. It's a very high-end concept which has to be discussed at CA inter level, but there is one question in TS level I saw today. They have discussed how to value the stock. So for now, you can remember cost or net realizable value, whichever is lower. Okay. I don't want to get into the details in making you understand, because this is a concept which is related to CA inter level concept. And it's a separate discussion for almost a half an hour to 1 hour discussion on what is cost and what is not realizable value. That is not relevant at this stage. Okay. Though, in short, if I have to value the stock, I will value it at a cost in which I purchased, or I will value it at a price which I can sell the raw material. Right? Whichever is lower. For example, if I bought the raw material at 100 and I can sell it outside at 110, my valuation will be 100 or 110, whichever is lower. In this case, it will be valued at 100 rupees. Clear? If I can sell it outside at 90, my cost is 100, but I can sell it only at 90. So I will value the stock at 90 rupees. Clear? No questions will be tested on this. Don't worry. Okay. Since this topic came, I am forced to discuss this topic because I saw a question in TS level. Okay. Otherwise, don't worry. Just remember cost or net realizable value, whichever is lower. Any doubt? Now the next concept is trade receivables. Trade receivables and trade payables. Trade receivables, what is this, guys? See, we can make a cash sales or we can make a credit sales. Right? A business can make cash sales or business can make credit sales. Whenever the business makes a credit sales, it has to receive that amount. See, what is a credit sales? You come to my showroom, ask for a laptop, but you tell boss, I cannot pay today, I will pay after 1 month. Okay, I will pay after 1 month. That is called as credit sale. 30 days time or 60 days time, whatever it is, that is called as credit sale. Clear? So in case of credit sale, if I make a credit sale to Mr. X, that Mr. X is called as debtors. That Mr. X is called as debtors, or Mr. X is called as debtors. We also call this as trade receivables, but trade receivables is slightly a broader term. It includes bills receivable also. Okay, but interchangeably, even today, we use the word interchangeably, trade receivables and debtors. To the entire world, it is a same term only. But for academic purposes, trade receivables means debtors plus bills receivable. Trade receivables is debtors plus bills receivable. Debtors and bills receivable. Clear? Any doubt? Who is a debtor? Who is a debtor? Debtor.
The person who have to give money to the owner.
Because of a sale which has happened to him on credit. Okay, debtor is a person who owes money to the business because he bought goods on credit. Clear? Any doubt? Bills receivable, again, a very in foundation, there is a chapter itself called bills receivable. There is an entire chapter on bills receivable. For now, you can just remember someone has promised to pay the company. Again, it is on account of a credit sale only, but on account of a credit sale, the company will write a bill of exchange on them, and once they accept it, it becomes a bills receivable. It is something, a promise they are making a promise that I will pay in return called bills receivable. In return, it's a return promise kind of a thing. Okay. It's a written contract between two persons where they will tell that I will pay you a sum of rupees 1 lakh after 3 months. A written promise between two persons. Not exactly a promise, a written acknowledgement, because there is another thing called promissory note. You will not get, you should not get confused. So very simple. Debtors and bills receivable both have to pay money to the company. One on account of a transaction, another is also on account of a transaction along with an acknowledgement in writing. That is called as a bill of exchange. Clear? Any doubt? For now, you just remember this one. Trade receivables include debtors and bills receivable. Any doubt? And why this happens actually? What brings in a trade receivable? Because there is a credit sale which has happened. It is always on account of a credit sale which has happened. That is why we have debtors in our books of accounts. Clear? Any doubt? Are we good so far, guys?
Yes, sir.
Opposite concept. Now I purchase a laptop on, I am a laptop dealer. Suddenly I got an order of 50 laptops from one company. I told my supplier Dell is my supplier. I told my supplier Dell, give me 50 laptops immediately by today evening. Give me 50 laptops. Immediately I called Dell office, told them to give me immediately 50 laptops on credit. Immediately. I told them, boss, I will settle the amount after 1 month. I am making what? I am making a credit purchase now. I am making a credit purchase. I have to pay. I am a laptop dealer. I have to pay to Dell now. So Dell will ask this money from me after 1 month. Dell becomes my, what is Dell now? Dell becomes my creditor. We also call it as trade payables. Trade payables and creditors are interchangeably used terms always. Some people call it as trade payables, some people call it as creditor. But trade payables again is a broader term which includes not only creditors, also includes bills payable. Clear? But that term is interchangeably used. Even today, in our office also, we call it as how much is trade payables, how much is trade receivables, or we call it as how much is debtors, how much is creditors. We mean trade payables and creditors always as similar. There is no distinction because this bills receivable and bills payable concept, it very rarely exists in practical. Okay. Am I clear, guys? So trade receivables includes debtors and bills receivable. Trade payables include creditors and bills payable. Any doubt? What is a creditor, guys? Anyone in simple language? I don't want any technical definition. Simple language. What is a creditor?
The person who have to get money from us.
Okay. We will put it in a different word. If a company has to pay to someone, that person is called creditor. Because we have to think from the point of view of a company, right? Always from the point of view of a company. So we have to see whether company has to pay or company has to receive. That's it. If company has to receive, it is a debtor. If company has to pay, it is a creditor. Any doubt? Yes, Aditya.
Sir, if normal people like us owe money to someone, so that guy would be creditor, right?
No. If I have to pay to you, I have to see why I have to pay to you. Are you an employee of the company? Then you will become salary payable. If you are a supplier of the company, then you will become a creditor. If you are a lender to the company, you will become a bank loan.
So that job matters. That position
The
matters.
transaction matters. The transaction matters.
Thank
If you are
sir.
an employee, I have to pay salary. It will be salary payable. If you are a banker and you have given me loan, it will be a bank loan.
No,
Okay.
sir. Like if we take his money and we should pay them like a
Yeah.
debt.
Then it is a simple loan kind of a thing. It is a loan.
Okay, sir.
Okay. Creditor will always be on account of a purchase. Debtors will always be on account of a, not a purchase, it's a credit purchase. Debtors will always be on account of a credit sale. Debtors means credit sale would have happened. Creditor means a credit purchase would have happened. Clear? Any doubt? Yes, Sanjana, you have a question?
Sir, in case of a bank, if I take a loan and I'm repaying the loan with interest, will bank become the creditors?
No. Bank will not become creditor. Bank, it will be a liability which we have to show in our balance sheet, that we have to pay to the bank 10 lakh rupees we have taken loan. It will be a liability which we have to pay to the bank. It is not creditor. It is a long-term liability, non-current liability.
No,
Some-
sir, bank will become the creditor.
Bank will not become creditor, is only on account of credit purchase. Did I purchase anything from the bank on credit?
No, sir.
No. Then bank will not become a creditor. Creditor means there has to be a credit purchase. Debtors means there has to be a credit sale.
Yes, sir. Thank you, sir.
Clear?
Yes, sir.
Any doubt? See, I always feel happy when I get questions, because when you ask a question, not only you, there are 15 people in the class now, in my session now. There may be other 15 people who would have had a similar doubt. Their doubt also gets cleared. And feel free to ask question in whichever language you want. I understand 3 languages: Tamil, Hindi, and English. Okay, so the class will be in English only. But if you feel that you have to ask me in Tamil, you are absolutely feel free to ask me in Tamil as well. I think the larger audience understands Tamil here. Okay, so it's okay maybe, but we can keep it in English to that extent possible. But don't hesitate to ask. It's what I'm telling. And don't worry about asking whether I'm asking silly question or whether it is a question which is very easy question that I am asking. So don't worry about silly question. Don't worry about your mode of communication. The only thing that I want is you should not go with a doubt after the class. Okay. So feel free, interact with me. I encourage all kind of questions. So you can stop me anywhere. I will be happy to answer all the questions. Can you move ahead? Any doubts so far?
Sir,
Yes.
bills payable means the amount of which be payable in the specific day?
No, yeah. See, generally, bills payable is a broader concept like bills receivable. What happens is, when I make a credit purchase, the other person, how he will believe me? So what he will do, boss, you give me in writing that you are going to pay me a sum of 1 lakh rupees after 3 months. So today is 11th of July, August, September, October. On 11th of October, you are going to pay me 1 lakh rupees. You give me in writing. When I acknowledge that I have to pay a liability to Mr. X after 3 months for rupees 1 lakh, then it becomes a bills payable. So he will come to me exactly on 11th of October, ask me for 1 lakh. Boss, you only signed and gave to me. Now give me your 1 lakh. Give me my 1 lakh. That is called as bills payable. I'm talking in very simple terminology. Okay.
Okay, sir.
Okay, that is a bills payable. But both, whether it is a trade creditors or bills payable, underlying transaction or the base transaction is always credit purchase. Whether it is debtors or accounts receivable or bills receivable, we call it as accounts receivable or bills receivable interchangeably. Whether it is debtors or bills receivable, underlying transaction or the base transaction is always what? What is the base transaction, guys? How does debtor come into picture? Because of a
Credit sales.
Credit sale.
because of a credit sale. Debtors means there would have been a credit sale which have happened. Creditors means there would have been a credit purchase which would have happened. Any doubt? This should get registered in your mind. because in every chapter the terminology is there. Creditors, debtors, in every single chapter you will come across that terminology. In entire 11th, in entire 12th, after 12th in your college, when you go to job, everywhere this terminology will be always with us. Clear? Any doubt? We'll move forward. Okay, so we discussed about stock, trade. We discussed 3 terms now. Now, next is cost. Okay, what is a cost, guys? See, cost, when we talk about cost, right? When we talk about cost, it means cost of goods sold. It means cost of goods sold. What does it mean? For example, let me take an example of car manufacturing. If I am Hyundai or Maruti, I have to manufacture a car. There are a lot of components that goes into manufacturing, right? Can you name few components?
Sir, tires.
Tires. Only tires?
The engine.
Engine. Chassis. Chassis means the body of the car.
Spare parts.
Everything. Small, from a mirror, window, door, tire, engine, everything is a raw material for the car, right?
Steel sheets.
Steering, yes, steering wheel, everything. Now, if I only have the part, can I manufacture a car? I need to have some technician also to assemble the car, right? So there will be a technician involved to manufacture the car. There will be some workers involved. So there will be quality checks which will happen to ensure that safety, the airbags are working properly, the reverse gear is working properly, everything. So a lot of safety and quality control checks are being done to manufacture a car. So to bring the car at the stage of sale, lot of expenses are incurred. All these expenses are called cost of goods sold. All these expenses are called cost of goods sold. The cost to manufacture a car and to make it ready for sale. Till the point of sale, whatever cost is incurred, that is called as cost of goods sold. And once the car is manufactured, it goes to the Maruti showroom, right? It goes to Maruti showroom. So whatever cost is incurred in the showroom, that is not cost of manufacturing because the car is already ready. That is an indirect expense. Everything that goes into the car to make the car ready for sale, okay, that all those costs incurred for manufacturing and to make the car ready for sale, those costs are called cost of goods sold. So when we talk about cost, it is the cost of manufacturing a good or for providing a service. I am taking a class. To take this class, I need to have a laptop. I need to have an internet connection. I need to have a lot of things to deliver this class. So whatever is required for me to deliver this service, if I am doing, assuming I'm running a business of taking classes. As of now, I am not, because I'm doing it for my passion, but maybe in future, I may start taking it commercially. So whenever there is a coaching business happening, there will be a lot of things which may be involved, okay, for me to deliver the class. So whatever things that is required to deliver the class, those things and all, like an internet connection. Without an stable internet connection, I cannot take a class. Clear? That becomes my direct expenses. Clear? In case of a car, any expenses incurred to make the car ready for sale, that all those expenses, like it can be a small nut also, it can be a screwdriver, it can be anything actually, any cost incurred to manufacture the car, those things are called cost. Any doubt? From your book, if I have to read, it is the amount of expenditure incurred or attributable to a specified article, product or activity. Clear? Cost to specific article, product or activity. Example, cost of production or cost of goods sold. Any doubt? Clear, guys? Next, voucher. Okay. See, voucher is nothing but now I have an accountant in my office. I told him, boss, I am the owner of the company. I have a accountant in my company. I told him, record, I purchased a furniture for rupees 1 lakh. You pass an entry to record this furniture. He will tell, boss, I can only see the furniture, but how do I know that you have purchased the furniture or not? He will question, the accountant is questioning the owner. Now I am telling him, boss, I have a this one from Big Bazaar. I have this invoice with me. Basis this invoice, it is mentioned that there is a furniture sold. I have paid 1 lakh rupees. This document, you keep it. Based on this document, now you are convinced that I actually purchased a furniture. Now you can record this furniture. Clear? That is called as a source document. That is called as a source document, or we call it as a source voucher. So source voucher is, see, I cannot, tomorrow I have a team in my office. So I cannot tell them to record this transaction. I cannot tell them to record a transaction of 50,000. It can be a bogus transaction also, right? It can be a fake transaction also. So what they are asking me, you give me the invoice, you prove that you made this transaction, then only I can record this transaction. So we call it as source voucher. Source voucher means anything. It can be a bill, it can be an invoice, it can be a receipt. Those things are called source voucher. Clear? Now, when I give this source voucher, he will pass an entry, right? He will do a debit, he will do a credit. And after doing a debit and credit, he will take a printout of the debit and credit. That is called accounting voucher. The debit and credit will show furniture account debit to cash account 1 lakh rupees. Okay. Now don't think why furniture debited, why cash is credited. That is a discussion when I come to the topic of journal. Okay. I'm just giving an example. Furniture account debit to cash, one entry, one accountant has passed. Now he will bring that voucher for my signature because I have to approve that transaction in the books of accounts. Okay, that is called as accounting voucher. So he passed this transaction based on an invoice. That invoice is called source voucher. The accounting entry that he passed and brought to me for my signature, that is called as accounting voucher. Are you clear between source voucher and accounting voucher now? Clear? What is a source voucher? On the basis of which he will pass an entry. What could be that document? That document can be a bill, that document can be a receipt, that document can be a cash memo. Clear? When you go to Bata showroom and purchase a sports shoe or a sandal, they will give a invoice, right? That invoice will be mentioned as tax invoice or receipt kind of a thing. They will give an, when you swipe the card, they will give a receipt also. Right? So one, they will give a tax invoice. Another, when you swipe the card, they will give a receipt. Both these documents are called as source vouchers. Both these documents are called as source voucher. And when you go back to your company, I will change the example from Bata to laptop. When you go to the company, you will tell your accountant, boss, I purchased a new laptop today. This is the invoice for that laptop. This is the receipt of my payment through credit card. Now you keep both this, pass an accounting entry. It's a capital expenditure. So he has to debit fixed assets account debit to cash account. He has to pass the entry. Why this debit and credit? That is a separate discussion. That you don't worry about debit and credit. That will get registered in your mind very, very clearly, that you will never forget debit and credit once we get into that chapter of debit and credit. Clear? For now, I'm just using that example. Furniture account debit to cash, laptop account debit to cash. And the moment he records that transaction, he will take a printout and come to me for my signature. That is called as an accounting voucher. Clear on source voucher and accounting voucher? Any doubt, guys? Clear? Fantastic. We'll move to the next topic then. Next topic is discount. Okay, discount is of two types. Okay, one is trade discount. Another is, okay, excuse me for my handwriting. My handwriting will always be bad. Please bear with my handwriting. Okay, trade discount and cash discount. What is a trade discount? I go to Dell, tell them that I want 500 laptops by this week. 500 laptops. It's a huge order for Dell. 500 laptops I'm asking from Dell. Now, when I ask for 500 laptops, see, generally I purchase only 1 or 2 laptops. Now, there is a college which has approached me to sell some laptops. They have a requirement of 500 laptops. So immediately I am going to Dell and asking for 500 laptops. When I ask 500 laptops, their one laptop is 1 lakh rupees. Okay, so assuming one laptop is 1 lakh rupees. If I go for 500 laptops, will they give me for 1 lakh or they will give at a lower price?
Lower price. Sir.
Lower price. I can ask the same laptop for 90,000 to them, right? That is called as trade discount. That is called as trade discount. That means my purchase of laptop is not happening at 1 lakh now. It is happening at 90,000 because I am doing a bulk purchase. Okay. So this trade discount, now my price of the laptop, will you call it as 1 lakh or 90,000? Price of the laptop is 1 lakh or 90,000 now? What is the price of the laptop, guys?
So 90,000.
90,000. So whenever I get a trade discount, that trade discount is never recorded in the books of accounts, because what I will record 90,000 laptops, 500 laptops multiplied by 90,000, whatever is the amount. 500 laptops multiplied by 90,000, that is the accounting entry which will go into my books of accounts. Okay. Trade discount is never recorded in the books of accounts because that is mostly given on bulk purchase. Trade discount is never recorded in the books of accounts. Are you clear, guys? Now I have purchased 90,000 rupees for one laptop. I have purchased 500 laptop. Okay. Now Dell has given a condition. If you pay me within 10 days, I will give you 5%, 10% additional discount. If you pay me within 10 days, I will give you 10% additional discount. So from 90,000, for every laptop I will get 90,000 into 10% is 9,000 rupees I will get back. Condition is, what is the condition? What is the condition?
They have to pay it back within 10 days.
Yeah, they have to get the money within 10 days. So this is dependent on whether I will pay within 10 days or I do not pay within 10 days. Clear? Now, if I pay within 10 days, they are forced to give me that discount. Instead of 90,000, I will have to pay only 90,000 minus 9,000. I have to pay only 81,000. That 9,000 rupees is called cash discount. That 9,000 rupees is called cash discount. That 9,000 rupees is recorded in the books of accounts because my purchase was 90,000. I am getting a cash discount. This cash discount is what? An income to me. It's an income to me because I have to pay lesser now. My purchase was at 90,000, but I am getting a cash discount of 9,000. That means I am getting an income now. Okay, so 90,000 was my expense. 9,000 is my income. Net outflow is how much? 81,000 only. Clear? So trade discount is not recorded, but cash discount is recorded. Cash discount is on early payment. In short, if I want to make an early payment, many of the suppliers, they give cash discount. Clear? Trade discount on bulk purchases. On bulk purchases, we have to pay 1 second. Someone is knocking on my door. Give me a moment, guys. Let me open the door, please. Sorry, guys. I'm back. Okay. So what I was discussing about trade discount and cash discount. Okay. So in case of 1 second, again, someone knock it. Sorry, guys. Okay. So cash discount is for early payment. Trade discount is on bulk purchases. Is trade discount recorded in the books of accounts? No, because my value of laptop, my purchase price of laptop is 90,000, not 1 lakh. So it never gets recorded. But cash discount is I get for 90,000. Only if I satisfy to pay early, I get a cash discount. Okay. When I get a cash discount, it becomes my income. It becomes my income. So cash discount is different and trade discount is different. Any doubt, guys? Are we good? Okay. So we have covered 27 terms now. The next one is bad debts. The next one is bad debts. What is bad debts, guys? I made a credit sale, right? To whom I made a credit sale? To whom I made a credit sale? Debtors. Fantastic. Debtors, I made a credit sale. Now all the debtors will not be good, right? I made a credit sale of 10 laptops for 1 lakh rupees. Out of this, one customer is defaulting. He is not able to pay. 9 customers have paid me. One customer is not able to pay me. Now, I was expecting 10 lakhs. 1 lakh into 10 laptops is 10 lakh rupees I was expecting to receive. I got only 9 lakh rupees. One customer is not paying me 1 lakh rupees. In business, it happens, right? That one customer who is not paying me will never pay me also because he is not in a position to pay. I call that as bad debts. That becomes a loss to the company. That becomes a loss to the company, right? That becomes a loss to the company. A customer who is not able to pay, ultimately it will become a bad debt or loss to the company. Clear? So bad debts happens because there is a debtor in the books of accounts. One debtor is not good, is not able to pay. That debtor who is not able to pay, that is called as bad debt. It is a loss to the company. Clear? Now, I can't do anything with that 1 lakh rupees. I have to write off that 1 lakh rupees. From my books of account, I have to write off as expenses. I have to charge that to my profit and loss account. I am incurring a loss of 1 lakh rupees. Clear? Bad debt is the amount which is not recoverable from the debtors. That is called as bad debt. It is a loss to the company. Clear? We will discuss the accounting entries in second last chapter, there are a lot of discussion on bad debt. Financial statement, there is a lot of discussion on bad debt. When we go there, we will discuss what is the accounting entry, what happens, what accounting entry we have to pass at the time of bad debt. We will discuss in that chapter. It is clear? Concept is clear? Okay. Next is balance sheet. Balance sheet. In the first class, we discussed, when we spoke about summarizing, we discussed about profit and loss account and balance sheet.
It
Balance
is
sheet
a
is nothing
statement
but
of balances of assets and liabilities, right?
fantastic definition. Balance sheet is a statement of assets and liabilities. When I look at the balance sheet, it tells me how much asset the company is having, how much liabilities the company is having. Asset, liabilities, and capital. Three things are there in the balance sheet. Clear? Balance sheet is a statement of, generally we call it as assets and liabilities, because liabilities include both internal and external. Internal liability is capital, external liability is borrowings or loans or creditors. Clear? On one side, I have assets. On another side, I have liabilities and capital. That is called as a balance sheet. When I look at the balance sheet, I can get to know the strength of the company, whether this company is a solid company or company with a strong financial position or a company with a weak financial position. By looking at the balance sheet, people can judge the strength of the company. Clear? Any doubt? Balance sheet is a statement of assets and liabilities. Clear, guys? Okay. Next is book value. Next term is book value. What is book value? Book value is nothing but the amount at which I record the transaction in my books of accounts. I told you, right? I would have purchased a laptop in my COVID time. During my COVID days, I purchased a laptop for 1 lakh rupees. Today, 2020, COVID came in 2020. Now it is 2026. The same laptop has now doubled the price. Now 1 lakh rupees laptop has become 1.5 lakhs. But still in my books of accounts, when I recorded the transaction, I recorded at 1 lakh. It will always remain at 1 lakh minus depreciation. Depreciation and all, you don't worry. I'm just giving an example. I recorded that laptop at 1 lakh. It will always remain at 1 lakh less depreciation. Even though the market value has become 1.5 lakhs, I cannot change the value from 1 lakh to 1.5 lakhs because today it is 1.5 lakhs. That 1 lakh is called as book value. That 1 lakh is called as book value. Clear, guys? So book value is the transaction at which, book value is the amount at which the transaction are recorded in the books of accounts. It has nothing to do with market value. Today the market value may be 2 lakh also, but still in the books of accounts it will be at 1 lakh only. Clear? So book value is the amount. Now read the definition. I will ask you to read the definition along with me in T.S. Grewal. When I explain the concept now, keep the T.S. Grewal book handy with you, or I have shared the PDF, those who are not having T.S. Grewal with them. Read the language given in the books of account. Whatever I am talking, the same language will be there in the books of in T.S. Grewal book. What is given in the language? This is the amount which an asset is existing in the books of accounts. Clear? So how much I purchased? 1 lakh rupees. That 1 lakh rupees is the value at which it is recorded in the books of accounts, not 1.5 lakhs today's value. Clear? Any doubt? Are you clear on what is book value? We'll move to the next concept. Books of accounts. See, books of accounts are nothing but, when we spoke or discussed the definition of accounting in the first chapter, one of the things was recording. Where do we record the transaction? Where do we record the transaction? In journals. Where do we summarize the transaction? In ledgers. Okay. So this journals, ledgers, everything put together is called books of accounts. Everything put together is called books of accounts. Journals and ledgers. Clear? This profit and loss account and balance sheet is not books of accounts. That is summarizing. I record the transaction in journal. Then I move to ledger. From ledger, I move to trial balance. From trial balance, I move to profit and loss account and balance sheet. This is the series. It starts with journal. From journal to ledger. From ledger to trial balance. From trial balance, we finally draw profit and loss account, balance sheet, and cash flow. Clear? So my recording happens where? My recording happens in journal and ledger. This journal and ledger is called books of accounts. Clear? Any doubt? Any doubt, guys? Next two line items are credit and debit. Okay. Credit and debit, two terms are there. We will understand this term in detail when we discuss journal. Okay. When we prepare a ledger account has two sides. The left side is called debit, the right side is called, okay, the right side of an account is called credit side, the left side of the account is called debit side. Okay. What is a debit and credit? Beyond this, I don't think it is relevant for you to understand. Okay. So an account has two parts, debit and every transaction. See, I spoke about buying a laptop, right? I spoke about selling a laptop, right? Buying a laptop has a debit and credit. Selling a laptop has a debit and credit. Payment of salary has a debit and credit. Every transaction that we record has a debit and credit. Clear? So in the ledger, the left side is debit, the right side is credit in the ledger. Okay, the format of the ledger is date, particular amount, and again date, particular amount, and ledger folio. Date, particular amount, ledger folio, date, particular amount, ledger folio. 4 columns are there in the debit side, 4 columns are there in the credit side. Okay, those are all very early discussions for you. Okay, when we go to the chapter, you will understand what is debit and credit. Okay, clear? So debit and credit is that much only. Depreciation. I spoke about, I purchased a laptop in COVID at 1 lakh rupees, right? I purchased a laptop for 1 lakh rupees. I purchased during COVID. See, all this I'm giving examples to make you understand. Okay. Now 6 years has passed. Every year, if I want to sell the laptop, can I sell that at 1 lakh rupees now? No one will buy. Why? Because I have used the laptop for 6 years. Even though I do not use the laptop, I purchased something in COVID in 2020. I forgot. I kept in my almirah. After 6 years, I remember I saw one laptop in my unused laptop I saw in my cupboard. Can I sell that at 1 lakh rupees now? I cannot sell. So either whether I use it or I do not use it, I still cannot sell the laptop at 1 lakh rupees. So the value of the laptop reduces either by usage or by passage of time. Okay, that is called as depreciation. That is called as depreciation. Every year the value of the laptop will come down. There are methods of calculating depreciation. We have a separate chapter called depreciation. Chapter number 15 of the book is depreciation. A separate chapter on depreciation. There are 2 or 3 methods of calculating depreciation. We will discuss in that chapter. Okay. For now, it is a decrease in the value of asset. Why the value of the asset is decreasing? Because of 2 things. Either because of using the asset or because of passage of time. Because of using the asset or because of passage of time. In both the situation, the value of the asset will come down. Clear? Any doubt? So they have used the word depreciation is fall in the book value of fixed asset because of its use, or with efflux of time. Instead of efflux, you can use passage of time also. Easier word, passage of time. Or obsolescence or accident. Okay, if there is a fire, automatically everything is become zero, right?
What was the meaning of efflux?
Efflux is nothing but passage of time.
Passage.
Yeah. 1 second, I'm getting a call. Hello. Yeah, I'm in class. Don't Yeah. Flux is nothing but you can alternatively you can use the word passage of time. Clear? Any doubt? Okay. Next is entry. What is an entry? The journal entry that we put, debit and credit we put, right? One thing we will debit, another thing we will credit, that is called as an entry. Any doubt? Next is insolvent. It's too technical a term. In simple words, I have to give one example, means a person who has become bankrupt or a business which has become bankrupt. That means the business is not able to settle the liability. They are not able to pay the employees. They are not able to pay the creditors. They are not able to pay the bank loan back. So if the liabilities of the company is higher than the assets of the company, it's a dangerous situation that company can become insolvent. Clear? So someone who is not able to pay the debts, they are called as insolvent. In simple words, actually, it's a very technical term, very detailed term. In simple words, if someone is not able to meet their debt obligations, they become insolvent. Solvent is opposite, someone who are able to pay. Someone who is able to pay is solvent. Someone who is not able to pay is insolvent. Okay? Clear? Next, proprietor. Proprietor is nothing but owner of the company. Proprietor is nothing but owner of the company. He is called the owner of the company. Proprietor is nothing but owner of the company. The person who brings the capital into the company. The person who brings the capital into the company, that person is called proprietor. Clear? And the last one is financial statement. We have discussed in detail. It's profit and loss account and balance sheet. Profit and loss account will tell whether the business has earned a profit or incurred a loss. Okay, if income is higher, expenses are lower, it's a profit. If expenses are more than income, it's a loss. Simple terminology for you. And profit and loss account, balance sheet, this is called financial statement, and also it includes cash flow. Cash flow is maybe, since it is too basic for you, that's why it is not covered. In simple words, it is profit and loss account and balance sheet. Clear, guys? Any doubt? So we are concluding this chapter. We have 20 minutes time with us. We will take the MCQs now. Any doubt so far, guys? Any doubt so far? No doubts? Okay. This illustration, one illustration is given. You can skip that illustration for now. It will be too heavy for you now at this stage. But we will discuss this at some point of time when we get into journals and other things. You will be in a position to appreciate this better. Otherwise, it will become too heavy for you to understand at this stage. Okay. Now, I think someone reminded me about prepaid expenses and outstanding expenses, which I again forgot actually. So let me discuss that now. Okay. I will stop presenting now for the second. Okay. Are you all clear on this concept, guys, so far, whatever we discussed? Okay. And you will feel that MCQs, whatever MCQs that you are going to pick now, all the MCQs you will be in a position to answer. You will not require my interference in answering any of the MCQs. I will demonstrate to you when we discuss the MCQ. All of you will be in a position to explain to me. Clear? That is, if you're attentive to the class, everything you will be in a position to answer yourself actually. My contribution will be very less in helping you answer the MCQs. You will do it on your own and you will feel good about answering those. Okay. What I was discussing about prepaid expenses and outstanding expenses. Okay. There are two concepts called prepaid and outstanding. A financial year is always April to March. Clear? Now, in the month of January, I take an insurance policy. insurance policy is always for 12 months actually. Okay, insurance policy is always for 12 months. In the month of January, I take an insurance policy for 1,20,000 to this policy is to protect my assets. I have covered my building, I have covered my furniture, I have covered my laptop. All the fixed assets of the company are covered under this insurance. If some loss happens, the insurance company will pay me the amount. 1,20,000 of premium I am paying for this insurance. Period of insurance is my books are April to March, but this period of insurance is January to December. In the next chapter, I will discuss about matching concept. In the next chapter, I will discuss about matching concept. There you will appreciate this much better. Whatever I am discussing now, you will be able to appreciate this much better when we discuss the matching concept. Always a business can record expenses only for 12 months. Which 12 months the business can record? April to March. But here, I have paid the premium for Jan to December. That means Jan to March is only the 3 months which is coming in this financial year. April to December is coming in the next financial year. Can I record an expense pertaining to next financial year in my current financial year? It is not possible. That is called as matching concept. When I discuss matching concept, I will discuss in detail. So I paid for 12 months from Jan to December, but my expenses in this financial year is only for 3 months, Jan to March. The remaining 9 months that I have paid do not pertain to this financial year. It pertains to the next financial year. The 9 months expenses that is pertaining to next financial year, that is called as prepaid expenses. That is called as prepaid. I prepaid that expenses pertaining to the next financial year. That is called as prepaid expenses. For now, this much understanding is enough. A future expenses I have paid in the current financial year. Am I clear? Okay. You will discuss. See, don't worry about not understanding a particular concept now, because the entire 11th we are going to discuss this many times. Okay. And this is just a terminology that you have to register. For now, you can just register that a future expense if we have paid today, that is called as prepaid expenses. How it is calculated, that I will discuss when the topic comes in detail. Clear? Any doubt? Outstanding expense. I have taken a building on rent. I have taken a building on rent. I have to pay 1 lakh rent to my owner. I have to pay 1 lakh rent to my owner. In the month of March, I was not able to pay my owner 1 lakh rupees. I did my business in the month of March. I was running my business. That means I have used the services. I have used the premises. But I am not able to pay the rent. Is it an expense or not for the company? For the business, is it an expense or not? I have used the premises. I have done my business. I have done laptop sales in my business. On the rented premises, I have done the laptop sales. But rent, I am not able to pay 1 lakh rupees. Is it an expense for the company or not?
It is still considered as an expense.
That is an expense. The fact that I am not able to pay
It
do
is an
not mean that it
expense.
is.
Rent is an expense.
No, I am telling rent is an expense. But I am not able to pay that rent to my landlord. Just because I am not able to pay the rent to my landlord, that does not mean that it is not an expense. It is still an expense, and it is a liability also. Now, it is a liability also, because my landlord, whenever he sees me outside, he will ask, Prasad, where is 1 lakh rupees? Where is the rent for my office? Clear? So whenever I go out and if I hit my landlord or meet my landlord, he will ask me, where is the rent? So that means I have a liability to pay to him. That is called as outstanding expenses. Expenses incurred but not paid. Expenses is incurred. I have enjoyed the premises, but I have not paid rent. Expenses incurred but not paid is outstanding liability. Any doubt? Any doubt? What is an outstanding liability? Similarly, salary. I have taken 10 employees on, I have hired 10 employees. In the month of July, this month when I have to pay the salary, I am short of cash. Does that mean that I should not, that expense is not there? That expense is there. What will happen? That will become as outstanding salary. That is become as outstanding. That was outstanding rent. This is outstanding salary. Both are liability. Expenses incurred. I have incurred that expense, but I am not able to fulfill my commitment. Whenever the employee will see me, he will ask me, where is my money? Clear? So it's a liability for the company. Clear? Any doubt? Clear? So these are all outstanding liability. Now let us get into the MCQs, guys. We have 10 minutes, but we will try to cover all the MCQs. If it is getting extended by 5 minutes, bear with me. Can we take it up, guys? MCQs? And you are the ones who are going to answer. My contribution in MCQs will be very low. So all of you have to participate and tell me the correct answer. Are we ready, guys? Okay, let me share my screen with you. Okay, let me share my screen. Don't look at the, only one condition, don't look at the answers. Fine? Keep your books aside, don't look at the answers, guys. Let's solve it
Okay, sir.
together. Can you see my screen, guys, now? Can you see my screen?
Yes,
sir.
Where is that pencil? Gone. I got the pencil now. Okay. Yes, can you see my screen? Select the correct alternative. Capital is what? 4 options are given.
Option A.
Internal liability.
Okay, let everyone participate. Capital is internal
Internal
liability,
liability.
external liability, or what?
Internal liability.
Internal liability.
Internal
liability.
liability.
Fantastic, guys. Next one. Goods taken by the proprietor is what?
Drawings.
Drawings.
Option B, drawings.
Drawings.
Option B, drawings.
Next. One second. My screen is moving. Amount received. Amount received or receivable against sale of goods. See, one thing very important to know, understand is in the normal course of business. In the normal course of business, is it revenue or capital?
Revenue.
Revenue, sir.
Revenue.
Revenue. Whenever it is related to business, in the normal course, it is called as revenue. If it is not in the normal course of business, it is called as capital. Yeah?
Capital.
Amount paid or payable against purchase of goods. Purchase of goods is my day-to-day operation. It is called as revenue or capex.
Capital expenditure.
Capital.
Against purchase of goods, my business is purchase and sale of goods. So whatever I do with related to purchase or sale of goods, it is called as revenue expenditure.
Revenue expenditure.
It, in simple word, it is nothing but purchase. My purchase is revenue expenditure or capital expenditure? Purchase of goods is revenue expenditure. Purchase of furniture. In a laptop showroom, I was having sofa, right? That sofa is capital expenditure. The laptop is revenue expenditure.
Revenue expenditure.
Clear? Are you able to correlate?
Yes, sir.
Okay. expenditure of revenue nature that gives benefit of more than one accounting year. Revenue, it is revenue. One second. It is revenue, but gives benefit for more than one accounting period. It is revenue, but gives benefit for more than one accounting period. It is called as
So none of this.
deferred revenue expenditure.
Deferred revenue expenditure.
Deferred revenue expenditure. I will give an example here. Dhoni gets a contract from Coca-Cola for 500 crores. 500 crores. Okay, I'm just giving an example. Dhoni gets a contract from Coca-Cola for 500 crores. It's a 5-year contract. Should they record the entire 500 crores as expense in 1 year, or they can defer it for 5 years?
Defer it for 5 years.
That is called as deferred revenue expenditure. That is called as deferred revenue expenditure. Just an example to make you understand. Clear? Because the contract is for 5 years, it will not be right to take entire 500 crores as expense in the current year. Every year they will take 100 crores as expenses. Clear? A person who, see, I will highlight few words. Person who owes amount to a firm.
Debtor.
Person who owes amount to a firm is called
Debtor.
debtor. It is
Debtor.
debtor. A person to whom I have to
Creditor.
give to someone, he is called as
Creditor.
creditor. Purchase means purchase of what? What is meaning? Purchase means purchase of. Is it stationery for office use? It is goods for
This word is said.
Option A, goods for
resale. Correct.
resale.
Correct. Liability arises because of what? A liability. Liability will come when? Because of.
Cash as well as
Will there be, if you make a cash transaction, will there be any liability? Do you have to pay to someone? You have already completed a cash transaction. Do you have to pay again? No. Liability will come only because of a
Credit transaction.
credit
transaction.
transactions.
Clear? Next one. The amount invested by the proprietor in a business is called
Capital.
Capital.
capital. Stock is valued. This is the reason I was discussing that one. Stock is valued at cost of net realizable value, whichever is lower. It's a very technical concept, not at all relevant at your level. It is a CA inter-level concept, not even at CA foundation level. Clear? For now, you can just remember cost of net realizable value, whichever is less. Clear? Bank overdraft. Okay, bank overdraft is nothing but at times bank gives an option to the proprietor to withdraw some money in excess of the balance that, see, he is having a balance of 1 lakh. But bank will tell boss, you go and withdraw 5 lakh. I will give you a limit of 5 lakh. Beyond his cash balance, they give an option for him to withdraw. That is called as bank overdraft. Now, if he has balance of 1 lakh and if he withdraws 5 lakhs, he has to return that amount to the bank, right? That is called as what it will be now. Now it will be what? Bank overdraft is what? Short-term liability or long-term liability? It will be a short-term liability.
Short-term liability.
Because bank, whenever they give an overdraft, they give only for a very limited period. Bank loan they will give for 5 years, 10 years, but overdraft they will give for 3 months, 4 months, 6 months less. It will always be a short-term liability. Clear? Clear? Which of the following increases capital?
Option D,
Increases capital.
profit.
One second. Let us scan each and every terminology. Drawings. What will drawing do? I have put 1 lakh in my business. I have put 1 lakh in my business. I am withdrawing 50,000 from out of 1 lakh. It is increasing the capital or reducing the capital?
Reducing the capital.
Reducing the capital. That means this is not an option.
Decreasing.
When I incur a loss, my capital will increase or decrease?
Decrease.
Decrease. It is also not an option. If I incur an expenses, my capital cannot increase. It is also not an option. So right option is
Profit.
when I make a profit, capital will increase. Clear?
Yes, sir.
So you have to just don't stick with the answer. Try to understand the logic why other 3 are wrong. See, there can be only one right, but other 3 are wrong, right? Why other 3 are wrong? You have to emphasize on that also. Clear? Then only your entire concept will get cleared. Clear? Which of the following is not a fixed asset? We will again emphasize on all the not a fixed asset. What is a fixed asset? Something which can be used for more than 1 year.
Sir, balance with bank.
Balance with bank. This is
Balance
always
with bank.
balance with bank. Today I am having, tomorrow I may not be having. Today I am having 1 crore, tomorrow it can become 0 also. So building more than 1 year, plant and machinery more than 1 year, goodwill more than 1 year. Goodwill is intangible or tangible?
Intangible, sir.
Intangible.
This is tangible. This is also tangible. This is
Intangible.
intangible. Clear? Try to correlate with multiple things that we learned. Clear? Which of the following is not a long-term liability? Which of the following is not a long-term? See,
Capital.
debenture I will explain maybe when we go to 12th, there is a separate chapter called debenture. We will understand that. Which of the following is not a long-term liability? I told creditors. See, whenever we purchase goods on credit, will he wait for more than 1 year? He will not wait. So this guy is a short-term liability. This answer is correct. Term loan generally is for a longer period of time. Capital is an internal liability, and debenture are also for very longer period. It is for 10 years, 20 years or something. Clear?
Sir, why is capital not long-term, sir? Why is it not being a short-term liability?
Capital,
Yes, sir.
when you invest in the business, do you invest to come out of the business tomorrow,
No, sir,
or
for a
you
long
want to
time.
stay in the business forever?
For a long time, forever, sir.
Forever. Okay, when we invest into something, we like to stay in the business for forever. My intention is not to wind up the business by tomorrow and come back and take the capital out,
Yes, sir.
right? So capital is always long term. Clear?
Okay, sir.
Very interesting question, guys. If you ask question like this, you will be making things clearer for you. Which of the following are goods? Machinery manufactured for sale, furniture purchased for sale, books and stationery purchased by a machinery manufactured for sale. My intention is selling. That means it is a good. Furniture purchased for sale. I repeatedly use the example of laptop and sofa showroom. Now it is a sofa for me. So sofa purchase for sale is a good. I am now a stationery dealer. I am purchasing books for sale, selling it. That is also a sale. So answer is all of the above. Clear? Any doubt? Which of the following is an asset? Which of the following is an asset?
Machinery, sir.
Is
Option A,
purchase-
machinery.
Yeah, option A, machinery. Why others are not purchases? It is a revenue expenditure, not a capital expenditure. Why machinery? Because it is a capital expenditure. My intention is to use for more than 1 year. Another is it will be used for more than 1 year. That is the reason. Sales return is not asset, right? Purchase is also not an asset. Interest received is an income. Purchase is an expense. Interest received is income. Sales return is reduction in sales. I made a sale of 1 lakh. I'm getting 10,000 back. It's a reduction in income. Clear? Which of the following is a liability?
Rent
Which of the
payable.
following is a liability?
Rent payable, sir.
Option B, rent payable.
Option B, rent payable. Which of the following is revenue? Revenue is income. Which of the following is income?
Sales.
But
Purchases cannot be income, right? It's an expense for the company. Clear? Which of the following is not an expense?
Furniture, sir.
furniture.
Furniture.
Okay. So we have covered 21 questions. All 21 you guys have answered. I have not answered any one of that. Okay, I have not answered any one of that. I gave all the concept to you in the last class and this class, but I am not answering any question now. You are only answering, guys. Can you see the difference now?
Sir.
Can you understand the difference? Every concept is registered in your mind, guys. Okay, next one. Which of the following is a business transaction?
Goods purchased on credit.
Credit.
This is not. Employee dismiss is not. Proprietor purchasing for personal use. Personal use is what? Drawings. It is not a business transaction. Sale of personal asset. Again, it is drawing. It is personal. Nature of capital is
An internal
An
liability.
internal liability.
an internal liability. Fantastic, guys. You are going ahead of me. Capital is okay. This will be very tricky for you to answer. This will be very tricky for you to answer. In a balance sheet, there are two sides. One is an asset side, another is a liability side. Liability side, see this is how a balance sheet looks like. Sorry. This is how a balance sheet looks like. Oh, 1 second, guys. This is a balance sheet. Okay. This is liability side. This is asset side. Okay. Liability consists of capital and liability. Liability consists of internal liability and external liability, right? Internal liability, external liability. So my total assets minus liability will become my capital. Capital is excess of assets over external liability. So this is the total of assets. This is the total of liability. The total of assets minus external liability. This is external liability. So assets equal to liability plus capital one equation is there when we go to accounting equation. Okay. So for now, just remember excess of assets over external liability is this one. Clear, guys? Okay. Next, which of the following statement is not correct? Purchase includes what? Okay. Which of the following statement is correct? The term purchases include purchase of fixed asset. Purchases can never include purchase of fixed assets. Only when we talk about purchases, it is only goods determined. It is only goods determined. Purchase of fixed asset is a capital expenditure, not a revenue expenditure. So this statement is incorrect. Okay. Now the term opening stock means the goods lying unsold at the end of the previous accounting period. Out of 100 laptops I purchased in the example, 20 laptops were unsold, right, in March. 20 laptops were unsold in March, right? So in April 1st, that becomes the opening stock. So this statement is correct. The term closing stock means the good lying unsold at the beginning of the current accounting period. No, closing stock means goods unsold at the end of the accounting period. It's not at the beginning, it should be at the end. Term sales include fixed assets. No, sale will not include sale of fixed assets. It does not include. So this statement is also incorrect. This statement is also incorrect. So this statement is correct. Opening stock means goods lying unsold at the end of previous accounting period. Previous accounting period means last financial year. Clear? So last year's opening stock will become current. Last year's closing stock will become current year's opening stock. Clear? Trade discount allowed. Is it shown separately or not? Trade discount allowed.
It's not shown separately, sir.
I told you 1 lakh rupees laptop I purchased for 90,000. I will record at 90,000. It will never be recorded at 1 lakh and never be shown as discount. Clear? Which of the following is not of financial character?
Strike by employees.
So strike by employees.
Strike by employees. Purchase means buying of
Goods for
Goods
resale.
for
goods
resale.
for resale. Goods
Goods
means
for resale.
absolutely. Goods means what does
Items
goods
purchased for resale.
item purchase for resale? Okay, we are just winding up 4 more, guys. Out of the following asset, which is not an intangible asset?
Investment.
This is intangible. This is intangible. Sorry.
Investment.
Investment, because this is intangible. This is also intangible, and this is also intangible. So the right answer is what? Investment.
Investment.
Which of the following transaction cannot be measured in monetary terms?
Quantity of employees.
Revenue minus expense. Revenue minus expense is what?
expenses is income.
Is income, or in other words, we call it as profit. In other words, we call it as profit. Clear? Okay.
1 and 2, sir. Answer is 32.
Okay. Consider the following items. Current asset. Current asset is something which can be converted to cash within 1 year. Okay.
1 and 2, sir.
Short-term loan is a liability. First of all, it is not an asset itself. It's a liability. It is not an asset. Bank overdraft is a liability. It is not an asset. Prepaid salary. I paid some employees salary in advance. It is pertaining to the next year. I paid in advance. So today it is an asset for the company. Accrued interest. Accrued interest means I have earned the interest, but I have not received the interest. In future, I will receive that interest. Okay, for now, you can just remember accrued interest and prepaid salary, both are assets. Clear? Any doubt? Because other two are liabilities. Prepaid salary and accrued interest, both are assets. What it is, we have enough time to discuss during the entire 11th actually. See, few terms, I don't want to just dump you with too many terminologies. I can do that, but I don't want to do that. Clear? Because there is a capacity for you to understand. So let us not breeze that capacity. Any doubt, guys? All the 32 you have solved on your own, except 1 or 2 which were little different to you, which I had to explain to you. Otherwise, you had solved everything. So what you do, there are a lot of other questions in the book. Remaining questions also, without missing a single question, guys. You have to be very honest to me. Without missing a single question, please cover all the questions. Answers are also given. If there is a doubt, you ask me. Tomorrow we will start with the next chapter. Clear?
Yes,
Without
sir.
missing a single question. I don't want anyone to miss even a single question. Without missing a single question, do everything, and then we will connect in the tomorrow's class is only 1 hour session, maybe extra 10 minutes maximum, or 10 or 15 minutes, or we will see. As long as you are enjoying, I can take the class. Fine. Okay. Fine, guys. I will meet you in tomorrow's class.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir. Bye, sir.
Thank you.
Thank you,
Bye.
sir.
Bye.
Thank you,
Thank you. Thank you, guys.